Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, April 23rd, 2015. On the markets today, we actually have markets that are close, really close to start a new high. If we take a look at the situation here on the NASDAQ, on the Dow Jones, however, we do not have this confirmation yet on all indices. However, they're testing their resistance. All indices are doing that. So those are the key sectors where I'm going to focus my attention on. First of all is the energy sector, where we do have several stocks that could start a breakout. The strategy that you should favor in the energy sector, though, is while we have oil that remains neutral, that could start a breakout, while we have the energy sector that remains neutral, that could start a bullish cycle, the thing is, you could start to day trade some stocks and building up your long positions. But all this have to do, if ever you already have enough long exposure in the energy sector, I don't think it's wise to again over increase your exposure. But if you were not able to participate in those last rally on the energy sector, today's the opportunity where you can build up your long positions. What I mean by that is that a stock like Trilogy Energy remains neutral. However, if you buy some stocks right now on that positions, you're building up your positions. Let's say you buy 200 shares or 300 shares of Trilogy Energy. Well, if ever the energy sector starts a breakout, you will be in a good position to actually take some profit earlier on that stock. Same situation for Berkeley Energy. Remains neutral, but could break out. So if ever Berkeley Energy goes above 834, that will be a clear buying signal, a clear breakout. While it's neutral, you can start to buy up some positions on Berkeley Energy. And if it goes above 853, you'll be in a good position to actually take some profit. Your exit point has to be if ever Berkeley Energy reversed this upward trend, if it goes below 750. Bankers Petroleum, same scenario, higher than 375, that would be a breakout, but building up rolling positions today, it's still okay with an exit point at 350. And if ever it goes above 375, that's going to confirm a clear buying signal on Bankers Petroleum. So overall, folks, the energy stocks remain interesting. The full list is published on marketgurus.tv that you can have access for free for 10 days. But those are among the stocks that should be on your watch list for potential breakout. Now, if we take a look at the situation here on the steel sector, it remains a sector that's active. For instance, here in the steel sector, we have Reliance Steel that's actually breaking out. Yesterday, we had some breakouts in the sector, but today we have additional breakouts. Reliance Steel is one of them. SunCoke reversing a downward trend. It's a breakout as well. Ternium is also a breakout. Tenaris, you can trade that stock. It's not a typical breakout because it has not stabilized just like Ternium or just like SunCoke, but you can trade that stock and put your exit point whenever the stock reverses its upward trend, so below 30.50. Elsewhere, we have Valley that broke out yesterday. That was the leader. The stock continues its rise. We believe the stock could reach 730, which corresponds to this 100-day moving average. And with the momentum indicators in that stock, the stochastics, the fact that several stocks are breaking out on the steel sector, we believe that this stock has the potential to pursue its rally until 730. So some steel stocks remain active, and some energy stocks you could start to build up your long positions in them because a lot of those stocks remain neutral and could start a potential breakout. Overall, if we take a look at the gold situation, well, gold is having now a slight intraday rebound. Gold stocks remain neutral. We still have a strategy where we want you to avoid to open any positions on the gold sector as long as the sector remains stuck within its sideways formation. In terms of the stocks though, Nefsen Resources, Argonaut Gold, all of them remain neutral, so it's not a sector where you should open any long positions. In terms of the earnings, we had some big caps that released their earnings today. A lot of them did great. One of them is Caterpillar. Caterpillar, it's a stock that we have recommended on marketgurus.tv as a buy around this area on April 10th or 11th. At opening, Caterpillar surged under great earnings. The stock did really great because despite the surge in the US dollar, we could have expected that this could have a negative impact on the earnings, but it didn't. And today, Caterpillar beat estimates. Revenue slightly decreased, but they did beat estimates. So this is why at opening on marketgurus.tv, we have advised to actually take some profit on Caterpillar. If you were able to do it, good job. Right now, the stock lost its upward momentum. But so far, I think if you have not been able to take some profit during the day, if there's a slight increase in the upward momentum, folks, be quick to take some profit on that position. Welcome back. Now, let's take some questions. There are some that are really interesting here. So Carl is asking me, do you have a title that it's time to take right now, around $2 to $3? Well, what I could do, usually I don't do it, Carl, but I'm going to do it for you for today because I know your viewers always comes to visit us on our website. The best thing you can have is marketgurus.tv. And look at this. Let's take a look at marketgurus.tv here. You have some breakouts in the TSX, but mostly the venture index are the ones where you actually have a stocks that are below $2 to $3 or sometime the NASDAQ. So let's start with the venture index to see what we have. So as a breakout today around $2 to $3, there's SFD on the venture index. However, SFD surging by 12.50%. So a strategy that you could do that is that instead of putting your stop loss at $2, if ever we lose all today's gains, we go at least at around 205, 210, you close that positions. Or you might say, you know what, I'm going to buy SFD today, and if ever tomorrow or the day after the stock has a correction or lose half or third of today's gains, I'm going to sell it just to minimize my loss. Another one would be what? Kicking Horse Energy in the energy sector. I think this one is more valid because also it's in the energy sector where we have a bullish momentum. The only thing I don't like with that stock is that there's a resistance at 351. So this is the thing I don't like with that stock. However, the momentum indicator is a positive. So I don't like Kicking Horse for the potential. And Mongolia growth surge at opening, but loss, it was totally a false signal. So among those stocks, I think SFD and the venture index represent the best opportunity. But as I said, in terms of strategy, what you should do is that if ever tomorrow or the day after the stock loses a third or a half of its gains, close it. Or if you want to remain slightly patient, instead of putting your stop loss at $2, put it, if ever we lose all of today's gains, around 205, 210 on a stock like NXT Energy Solution, SFD on the venture index. If you want all the list of the breakouts, though, you can shop them. And I would suggest you to make the free trial of marketgurus.tv. Usually on the NASDAQ, among those 13 breakouts, there might be some of them that are actually around $2 to $3. So this is the added value of MarketGurus.tv, because it's a menu that you have every day and you shop for the best buying signals that you like. Now, NKO, is it a buy signal? No, Jocelyn, it's not a buy signal, NKO. NKO remains neutral. Look, NKO had a nice rally here because they had some good news concerning the regulatory environment in India in terms of the prices that they're going to get for their natural gas there. So investors have been encouraged. But NKO, no, it's not a buy, Jocelyn. We need the stock to reverse this downward trend. As long as NKO doesn't go above 45 cents, which is that resistance there, which also corresponds to that downward trend, NKO is not a buy. So 45 cents and higher, this is where the stock will be a buy. It could be, but right now I don't see anything positive on a stock like that. I see it stuck there. Compared to other energy stocks, that stock is definitely not surging at all. Now, Stan, you bought WCP today. Let's see your move. You bought WCP today at 15.10. Okay, you bought at the top. Please analyze for exit, swing, 6-month hold. Thanks for the info. Okay, so you have a 6-month hold. Okay, now you bought that stock when it was reaching a resistance. Okay, now if you have a 6-month hold period, well, then I think you should not only limit yourself. Well, 1467 normally would be the exit point on a stock like that. As for the 6-month hold, I cannot give you a indication to see where the stock is going to go. But look, I think if you buy it right now, there's a probability that maybe the stock could pursue its bullish cycle or even break that resistance of $16. I think your exit point will be if ever the stock reverses this upward trend. So if it goes below, let's say 1453, which corresponds also to the resistance of February, that is the point where you should get out on Whitecap Resources. And while the stock pursues its rally and takes 5, 6, or 7%, while it's maintaining that upward trend, take some profit. Even if you have a 6-month hold, it's still okay to take some profit while the stock is maintaining that trend. So far, it's a hold on that stock.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above.
So I hope I help you stand with your trade on Whitecap. As I said, if you have a 6-month hold, it's still okay. $14.53, $14 as an exit point. And while the stock maintains its upward trend, take some profit along the way. Don't be too greedy on a stock like that, even if you have a 6-month hold on it, because right now we're testing a resistance on a stock like that, right? So that's a good strategy because that fits what I said earlier, where you have some stocks that are testing the resistance, you can build up your long positions on them. And if ever we have a breakout, that will be an opportunity to take some profit. So on that one, I have to give you props because you followed our advice there. Now, GBU, Dave has a questions on GBU. Analyze of GBU. Well, Gabriel Resources, they have a project in Romania. The Romanian government so far has not given them the go. They're negotiating with the Romanian government. So if they have no confirmation concerning that, it's not something positive for Gabriel Resources. Compared to other gold stocks, the stock took a big hit, right? So it's definitely not a stock that I would consider as a buy right now. I want to see good news coming out of Romania for their project there. It's a big project. So for me, Gabriel Resources, as long as it doesn't go above 53 cents, it's not a buy. Don't forget what happened to Eldorado Gold. Look, Eldorado Gold, when that happened here, when the Greek government said no to their project in Greece, investors didn't like it. So when you have a stock in the gold sector that has a project in an area where the government, it doesn't give them the permitting process, investors don't like it because they have spent so much money in it. Now they're going to have more debt and unable to get some gold out of the ground to repay their debt. So those are the risk factors that you have to take into account on a stock like Gabriel Resources. So 53 cents will be the buy. But for me, a stock like that, as long as I see no positive development with their project in Romania, I would not even put it on my watch list. I would watch to see what's happening there first, look at their website, look at the news, and then if ever there's some positive news, around 53 cents, that could be a good signal on Gabriel Resources. Now, is SPE good tradable stock for day trading? No. Why? Because I don't like when a stock has some points like this. For me, it's a lack of liquidity. I personally like when a stock is more active. There's actually not those points. Usually the stocks where we have the most active stocks are the ones that are on NASDAQ. I'll give you an example here. A stock like VGGL, right? Intraday wise, look, there's no points, right? The stock remains active. We have a wave of traders, a wave of sellers that's persistent in that stock. So it's easy for you to buy it, take some profit quicker. While when we have a stock like SPE, where intraday wise we have some points, for me it's a lack of liquidity, and this will jeopardize your possibility to actually take some profit quicker on a stock like that. So for those reasons, SPE for me is not a nice day trading opportunity because of those points, because of this lack of liquidity. Yes, it has volume, but liquidity wise in the intraday chart, I don't like it. I think Vito, the best index to be able to do some day trade is the NASDAQ index. Really, there's some nice opportunities there. Several stocks are really active, explosive. So if you want to really day trade, I think the NASDAQ index should be your focus for day trading. That's usually on their summary of the week. Most of the stocks that are the most active day trading opportunity are on the NASDAQ. Now, signal here, you bought PHM. Okay, at 168, April 15. Okay, April 15. Okay, you're right up on this area. Now, is it a sell? No, it's not a sell. There's still that upward trend that is there. Short-term wise, there's still that upward trend that is there. Well, you could consider this as a short-term upward trend there. Look, you might reduce your position, reduce it, but sell it totally. Not so sure about that. There's a probability that it stabilizes at 160, which is that 30-day moving average. I think it's healthy that we have a correction. So you might reduce your exposure on a stock like that, but to sell it totally, no, I don't think it's appropriate on a stock like that, because I think you can tolerate until 150, which corresponds to this support on patient home monitoring. Folks, I don't have a lot of time to take the two questions, but Al and Martin, I'm going to take your questions tomorrow. So stay there tomorrow. I want to show you here the list of the best day trade of the day. It's an ETF on the TSX. So it's HOU, because we believe that the upward momentum on the energy sector could be sustained, could be maintained, could be confirmed. And we have HOU that gave us clear, nice bullish signals. 966, 967, that's going to be the new go on HOU. So as I said, for energy sector is the most active sector today. You can build up your long positions on the stocks that remain neutral, and if ever they confirm a breakout, you'll be able to take some profit quicker on them. However, we do not have a confirmation of a clear bullish cycle on the energy sector, so this is why you should not be greedy in building up your positions, but go in gradually. If you already have enough exposure there, I think you could wait for clearer confirmation of the bullish cycle before increasing your exposure. For those of you who have no exposure at all, I think it's a perfect timing to start to build up your long position on that sector. That said, see you tomorrow on the Swing Trading Show on DecisionPlus.com.